Hi everyone, I'm Gianluca Valentini. I'm one of the co-founders of Equidom, and today I'm going to talk about uh, fundraising, fundraising at seed level. I often hear a lot of entrepreneurs saying, "Yeah, I know the business is ready, but I just need to raise capital." So today I want to discuss how to do that and also when to do that because I think timing is a crucial aspect of that. You shouldn't be raising capital too early nor too late. The real investors do not advertise themselves, which means you need to get to them by means of introduction or by talking to them uh, and understanding, or finding out that they are active investors. So once you get to them, how what are they looking for and how can you convince them? So the initial analysis is all based on two main layers of assessment. The first is the trends and the market that you're targeting, if they are going in your direction. In other terms, is it inevitable? Is it going to happen anyways? Assuming that there is a market trend, there is an innovation, something that's going to happen that is inevitable. Are you the one company who's going to be able to take on that market? Uh, are you going to flourish or perish when you're going to face a lot of competition? Because if it's a hype market, you certainly have a lot of competition. So make sure to show them that you are the best entrepreneur, that you have superior knowledge or superior traction or um, a competitive advantage that cannot be copied. Once both checks uh, have been accounted for, that's when we enter the field of money talks. And that's where some founders may struggle because they have little knowledge about finance or legal terms. Today, I'm going to just focus on two aspects that can be a deal breaker and how to deal with that. So, first of all, how much to raise and how to determine that. Um, and the second is when to raise. So, how much? Um, this is a very, very important signal for investors because if you are raising too little compared to your plan, then it will sound naive. If you're raising too much, then you're gonna trigger a lot of questions on why is this guy or girl raising that much compared to what I think is a reasonable investment for the plan he has in mind. Uh, so your strategy, your integrity even may be questionable, and you don't want to run that risk when you are building the initial trust with your future investor. I have to say that in my view, raising too little is more forgivable compared to raising too much. In the first case, you're gonna look naive, but an investor may say, okay, that can happen like a misjudgment. If you're raising too much, then that could be like a real deal breaker. So usually 18 months is an acceptable runway. Um, and make sure to validate your assumptions in terms of costs. Finally, when to raise capital, what's the right timing? You should put yourself in the mindset that you are raising capital for growing your business, which means you are getting the fuel for your engine rather than getting the engine. In other terms, again, capital is functional to your business. Your business is not functional to raising capital. If that's the way you're starting your startup, uh, that's a bad way to get it off the ground. Focus on building the business and consider capital as the last piece of the puzzle, as a resource, rather than considering raising capital as the target, the priority for the company at all costs. It's going to be easier to convince investors if they see that they just need to put more fuel on the fire to make it grow rather than putting in the capital to build the engine. This is it for today. So if you have any comments, feedback, please let us know. Any topics that you would like me to address, just drop us an email and I'll see you in the next video.